branch. We invite you for our second session of our series of seminars on GST. Today's topic is concept of first contract and its rate structure. We welcome all our members for this. I now hand over this session to Samat sir for further proceedings. Thank you all.
Thank you, Secretary sir. Thank you very much. Dear all, dear friends, the purpose of having this meeting is just to highlight there is a subtle difference between the construction contract and a works contract. We have come across situations where people are not able to distinguish the difference between the construction contract and the works contract. The construction contract comes with the reduced rate, which is 5% after 1st of April 2019. We have seen that even the works contract, people are charging that reduced rate because it is in favor of them. They charge less. They pay less to the government without understanding the implication which will happen, which will come at the future dates. So that is one reason where we felt it is very important to discuss on this chapter. We have to draw a line between these two subjects, which appears to be the same, but it is not. It appears for the business person, there also he used bricks and cement. Here also he used bricks and cement, but the contract is different. In construction contract, it involves sale element, it involves land, but in the works contract, there is no sale, there is only a service. There is a service of a composite, which is composite in nature. So to throw or to speak his mind, we have a learned speaker, Hitesh Jain, who is practicing in indirect taxes in Hyderabad. He has authored various books for SARC as well as for the Institute of Chartered Accountants Indirect Tax Committee. He have presented papers in various associations. He is a member of various trade bodies. So I don't want to stand between the speaker and the learned gathering. So I pass on I ask Hitesh sir to speak his mind on this topic and enlighten us on the concept of works contract and what are the various rates which are there in works contract. Hitesh Jain, please take up from here.
Thank you, sir. Hope I am audible and visible to all of you. A very warm good morning. I thank the Chengalpettu branch for giving me an opportunity to share the knowledge which we all are enriching upon. So let's dive straight into the topic today. That is concept of works contract. Can somebody please confirm whether it is audible and visible in the chat?
Yes, Hitesh.
Yes, sir, clear and visible.
Yes, sir. You are very much audible.
Right. Thank you. Now we'll start with the topic. Before diving into the topic in relation to the GST law, first we need to also see the background that why this works contract, because generally all the questions which we have to answer will fall in 5 parts or 6 parts, that is 5 W's and 1 H. So the first thing which I thought we should share, because what I presume that the audience is an average audience who knows GST, who don't know GST as well. So that is as a primary assumption which I am making. Learn members, why works contract has come. So there is a historical background to that. Now, the most important thing which happened in the past was related to the 46th Amendment to the Constitution. This is the foundation based on which works contract was introduced. A very famous case law called as State of Madras versus Gannon Dunkerley. That is in 1958, this case law was there. And in due to this judgment of the apex court, a flurry of judgments were given by the other courts and even the Supreme Court after that. So as an aftermath of those judgments, the government thought that the time has come to introduce the concept of works contract. Why it has happened actually? In simple terms, I want to explain it. Due to the complex nature of the indivisible contracts, say construction contract or any contract which involves work as well as sale of goods, that is transfer of property in goods. When both the components are there in the contract, sometimes it is not feasible for the party to divide the consideration or divide the aspects of the work and sale component of the contract. So that is the reason this judgment was given, and they did not allow the department to levy tax on the indivisible contracts. And the underlying principle based on which that judgment was given was the dominant intention test. So what is the intention behind the contract which is being followed, which is being drafted? That intention is important. So after that, a lot of things happened, lot of case laws were there. Then again, 1982, the constitutional 46th amendment bill was act was passed, and they have introduced something called as 29A. That is a definition which speaks about tax on the sale or purchase of goods. So they have not defined goods. That is the differentiation which we have to see. If anybody want to analyze this, they have to go to the respective Article 366, Clause 29A. So this is the foundation after which the taxability of the works contract came into picture. Generally, popularly, this is also called as deemed sales. The deemed sales concept was taken under Clause 29A, which is as follows. I have not included the other clauses in my slide. If you see the red marks, 29A says that tax on the sale or purchase of goods includes a tax on the transfer of property in goods, whether as goods or in some other form. This some other form is because of the consumption pattern which may be there in the contract. So this involved in the execution of a works contract, and they say that it is deemed to be a sale, and the person who is purchasing, it is a purchase for that party. So like this, sales under sales tax, they have initiated the taxability of the works contract. After that, Finance Act 1994 service tax was there. That is having a different background. So this is the foundation based on which this taxability came into picture. Now, the other aspects of the Clause 29A is they wanted to include the taxability of these items, that is controlled commodities, hire purchase or installment systems, right to use, leasing rights, that is leasing rights, services by associations to their members, and food, the restaurant, etc. Those activities they wanted to bring into the tax set. So that was the historical background based on which the taxability of works contract came into picture. Then after that, VAT regime was there, service tax regime was there. In that also, different way of taxing the particular activity was introduced, because VAT was the state specific legislation. They have brought their own definitions, own way of taxing, own rates, composition you may call, a regular methods may call. So different methods were identified at that time. So in simple, if we see the comparison of VAT and service tax, the intention has always been in the VAT regime, they want to charge the tax only on the good component of the particular indivisible contract. And in case of services, it will be on the service component of the contract. Just for understanding the difference between the VAT and service tax, these are the respective definitions which I thought we should compare. I have taken from APVAT because similar, since I am from Telangana, I have taken this. Maybe some slight change might be there in the Tamil Nadu VAT Act also. What they say, works contract means a contract for carrying out any work. This is the broad-based definition. It's too broad actually. They say any work, and then which includes various activities: assembling, construction, building, altering, manufacturing, processing, fabricating, erection, installation, etc. And the most important principle here is they say any movable or immovable property. Why I am highlighting this? Because there is a lot of relevance of these words when we go into the GST regime. So here they say in AP VAT as any movable or immovable property. So the activity can be for either of the property. So if I am going and giving a composite supply, a contract in which I am giving a service, say repair service with material, with the replacement materials, I'm giving that. So that might be for a machine. It can be movable, or for a vehicle, movable. So that was also being covered in the previous regimes. And when you go and compare this to service tax, that is, I have only considered the negative list regime in service tax from 1st July 2012 onwards for comparison purpose, where they say that if the contract is involving transfer of property in goods on which say sales tax is leviable, and there is a activity, there is a service activity for carrying out, and they specifically write about construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration. Remember these words will be useful in our rate structure in the GST regime as well. Why? Because the GST law is predominantly on the principles of the central legislation, that is excise as well as service tax. So that foundation, those terminologies are being used in the new law as well. So if you see, they say carrying out these activities for any movable or immovable property, or for carrying out any other similar activity or a part thereof in relation to such property. So in both the definitions, it is any property, movable or immovable. And there was various methods also, that is to tax the particular activity. In VAT, in our Telangana, there used to be a special rate. For construction contracts, there used to be a special rate. Even you can follow the regular rate if you are able to classify the goods separately with input tax credit. So that was the concept here. And when you go to service tax, this was a declared service, and declared service means they don't want to go into any question of taxability itself. They say that this is a service. So you have to accept from the declared service list as a taxable item under the Finance Act 1994. There was valuation, determination of value rules 2006, which were regularly amended also, in which there were two types of contracts. One was original works, one was the other works. And reverse charge also was there, 50-50 ratio in service tax. So this is the background. This background is important for us to see the current aspects of works contract in GST regime. Now works contract under the GST regime. Friends, the term works contract has been defined in the CGST Act. Now carefully see the terms. It is means a contract. It is not includes. It means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning. So the nature of activity is very broad. They have tried to include everything in the particular definition. And when you compare this with the old regime, construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration. So in a way, the terminologies from the service tax regime was being carried forward to the GST regime. But there is most important difference in both the definitions is this particular term, which is marked in red in your screen, any immovable property. So when you compare with the previous regimes, immovable property or movable property, and current regime, it is only with respect to immovable property. There are views in the fraternity or in the legal fraternity also that this may not withstand as per the constitutional provisions, but we are, as a professional, as the professionals who follow the strict interpretation of law, this is Bible for us. So any immovable property, there should be a transfer of property in goods. So this is derived from the 29A, that is constitutional provision. Same they have taken here is involved in the execution of a contract. So the contract of any type of construction contract, any repairs and maintenance of the contract, when you have a repairs and maintenance of a motor vehicle, that will not fall under this particular definition. But when you have a repairs and maintenance of your building, then that will fall under this particular provision. So this is the most important aspect. Why? Because if a contract, generally my personal experience, I would like to tell you that when, especially in the government contracts, in the public sectors, they are having a perception of calling any contract as a works contract. Because I have dealt with some clients like that who take every contract as a works contract and they have levied taxes as such on the particular contracts without going into the principles of a movable or immovable property itself. So if there is a cleaning service, they even call that as works contract because of limited awareness in the government fraternity. So friends, members, this principle of immovable property will be carried forward in every other slide in the particular presentation. So whenever we are discussing on any aspect, our predominant assumption will be that it is for an immovable property. Now, if you see the particular definition, there should be an activity which is very broad. Any kind of modifications, repairs, or original construction, original works, any civil work, all types of works will come under works contract. So there should be that particular activity to tax. There should be a transfer of property in goods. Without transfer of property, just pure labor contracts will not come under this particular activity. Which I have faced this issue in government sector. Actually, they even labor contract, they put it as a works contract, which is not right. So if there is no transfer of property in goods, then this particular definition will not be satisfied. There should be an immovable property. Movable are outside the purview of works contract. Now, what is immovable property? This is not defined in CGST Act or IGST Act. We have to only refer to the allied laws which we have, General Clauses Act and Transfer of Property Act. General Clauses Act definition under that particular legislation is a bit better when compared to the Transfer of Properties Act. It says it includes land. So word is include. So it is a broad definition. There is not means here. So it includes land, benefits to arise out of land. Now there is a dispute, transfer of development rights. People are interpreting it differently. Department is taxing that activity. The particular principle based on which the dispute is being created is this: benefits to arise out of land. If you see some pre-GST case laws, DLF related cases, some case laws are there which they say that development rights are benefit arising out of land. So it should be an immovable property. So various interpretations are there. Let us not go into that. For our discussion's sake, the definition of immovable property, it is land, benefits to arise out of land, things attached to the earth, permanently fastened to anything attached to the earth. So they intend to create a permanency in the particular structure, I should say if you are constructing a wall, it becomes a permanent structure with that particular land. So that permanency is important. Movable items, some removable. Just I have seen one video yesterday where a particular stadium in somewhere in Iraq or Iran, I don't remember, for the purpose of some World Cup, is totally movable in nature. They have used various types of plant and machineries which is fastened to particular land. Now, where that will be, that is a subject of dispute again. Especially in our Indian law, the classifications, all these things are not so easy to interpret. Even I got one query sometime back where movable office is there, like how we have the particular the containers in the ships. Using the same containers on a vehicle, offices are being built, and it is being called as a movable property, movable office, portable office. So it is not a benefit arising out of land. It is not anything attached to the earth. So the difference which we have to understand, permanency or the permanent relationship between land and particular structure is important. In the Transfer of Property Act, they just say, it is a negative definition actually. They say this is not including timber, growing crops or grass. So this is the simple definition in the Transfer of Properties Act. But these are allied laws, may not have a straight implication in GST law. When department creates a dispute, at that time we may have to use these definitions for the purpose of our interpretations and contesting the matters. Now, whatever we have discussed was the basic principles based on which the taxability of works contract is being structured. But for any activity or any supply to be taxable, the test of scope of supply has to be satisfied. So that is section 7, which is very simple for our case. Why? Because we are assuming that our activity is taxable in nature. We have to first satisfy section 7.1, that is the regular supply definition. And after that, there is an entry in Schedule 2. Schedule 2 will identify or will differentiate between an activity or a supply, which should be called as a good, which should be called as a service. Like in the pre-GST regime, we were having this problem of indivisible contract, where how much is the components of goods, how much is the component of services, we don't know. So in that case, we used to have even abatement provisions also, and some mechanism or some machinery was provided in the old laws in the form of composition schemes as well. Now in GST law, they don't want to go into that kind of concept to differentiate how much good or how much service is involved in a particular contract. What they want to do, they want to just straight away define that this particular activity is a service, this particular activity is a good. So for indivisible contract, when it is a works contract, the particular Schedule 2 entry 6A, they call works contract as a service. So there is no, in a way they have tried to bygo the particular disputes which were there in the old regimes, and they wanted to create a fresh start here. Now, what is Schedule 2? The entry, they say the following composite supplies shall be treated as a supply of services, namely works contract as defined in clause 119 of section 2. So the words which are to be concentrated are composite supply. So there should be a composite supply of works contract to be called as a service. So if a particular contract does not satisfy the criteria of composite supply, that is principal supply when compared with the independent supplies, if there is a principal supply and all the other activities are ancillary to that particular principal supply, then say example, you have supply of goods in which you have to also give transportation. If there is no supply of goods, you cannot give transportation. So this composite supply principle has to be applied here. Then that is defined as a service. So this is a broad representation. If there is a supply and it is for an immovable property, or it is not for an it is not a supply, then there is no taxability. And for an immovable property, yes or no. If it is not for an immovable property, it means it is for a movable property, then it may not be a works contract. It will not be a works contract. Actually, it will be a regular contract, and you have to assess the taxability, HSN or SSE codes independently. It will not be straight away called as a service. It can be a supply of goods as well, based on the particular nature of the contract. And when it is for immovable property, we have to see it is composite contract or a mixed supply. If it is a mixed supply, again, it may not be a service. Then you have to go for an independent verification of that contract, under which activity it will fall, highest rate of tax, you have to go for that. There is a strong possibility, say, assume there is a turnkey project, and there are some supplies which are not linked, which are not required to be done in that particular project. Department may contest it as a mixed contract instead of a composite contract. So that particular activity has to be seen whether there is supply of goods or supply of service. Whichever is the highest rate will go into the taxability. But when it is a composite contract, because of the main supply, that is supply of works contract, then only it will be covered under Schedule 2, Entry 6A, and it will be a service. Respective SAC codes only will be applicable. This is the most critical area when it comes to the concepts of this particular works contract. Why? Because ultimately the entire litigation in the indirect tax regime under GST is predominantly on the input tax credit. Department calls seamless flow of credit, but they are in a way trying to restrict any type of credit now. Now, what are the restrictions which are linked to works contract? Section 17(5), that is negative list of input tax credit. Then in that, specific C and D, actually the most specific for our discussion is C. I have also taken D in the discussion. Now, what is this? Provision says notwithstanding anything contained in subsection 1 of 16, that is furtherance of business, and subsection 1 of section 18, that is special circumstances, ITC shall not be available in respect of works contract service when supplied for construction of an immovable property. Then other than plant and machinery. Then except where it is an input service for further supply of works contract. I am a public sector undertaking into roadworks. I am giving the particular service to the general public, or I am giving, because generally what happens in public sector is the government will have a tripartite agreement with a particular contractor and a corporation to execute the roadwork project. So this particular vehicle or corporation is a medium to execute the contract. Now, if the public sector undertaking is also giving a works contract to their customers, then the input of the contractor will be eligible for them. I'll repeat it. I am a particular customer of a contractor. If I am into further supply of works contract, the subcontract which I have given to the contractor will be eligible as a credit. But there are some specific words which are being given here. There is construction, there is immovable property, then there is other than plant and machinery. Construction is defined as an explanation under the same provision. Again, plant and machinery is also strictly defined under the same provision. Then we'll just see that particular sections. Construction includes reconstruction, renovation, additions or alterations or repairs. Now, there is a popular dispute in the country about lifts. What is a lift? Will it become part and parcel of an immovable property, or it is a plant and machinery? Maybe I have selected a very disputed item. There are various interpretations. Karnataka High Court case laws are also there. Then the cone elevators, other various judgments are there which are having different interpretations. But for our discussion's sake, assume it becomes a part and parcel of the building. Why? Because this view is also having a good weight. DMart is there. DMart appoints an agency for installation of 5 lifts in the premises. Generally, what happens when DMart goes for any leasing of any property or any purchase of a property, what they do, they will construct their own building, or they will allow the lessor to construct the building as per their specifications. Now, this lessor will be giving the contract of lift to the company, any known company. Now, the known company is having a HSN of 9954. They will put 9954 only as the HSN number. They call it as a works contract. Now, this particular lift will be customized, will be built according to the specifications of the building floor by floor. There will be a special room for that, maintenance of that or maintaining the machinery. And as per the specifications of each building, that particular lift will be installed. Now, in my books of accounts, assume I am the person who is the lessor. In my books of accounts, I will be capitalizing this particular property, that is lift, with the building. Then ITC becomes ineligible. Why? Because construction includes reconstruction. It is not means, it is includes reconstruction, renovation, addition, alteration of repairs. It does not mean it is only repair activity. Construction as such will be covered here, and all the repairs also will be covered here to the extent of capitalization, they say. Now, this test of capitalization, somebody may dispute it as, what is capitalization here? Whether it is in the books of accounts or capitalization to the property. Some may charge it as a revenue expenditure also, but it will be part and parcel of the property. This is a way to dispute the particular activity. Then what we have to do, we have to go and refer the capital goods definition, which is mentioned here. Capital goods means goods the value of which is capitalized in the books of accounts. Now, this is the criteria for recognizing a capital good. People may have an opposite view also here, but when you see to the extent of capitalization, in my view, it should be the accounting is the only way to identify that it is capitalized in the books of accounts, because for further stages in our appeals and all, if you have to prove it, then it is only books of accounts which will be helpful. Now, so construction of an immovable property, works contract for construction of an immovable property is disallowed as an input tax credit. But if I am into the same line of business, I am also giving a works contract, then it is allowed as a credit. But same works contract is for an plant and machinery. Again, that is also allowed. So what is plant and machinery now? Here they say plant and machinery means what? It is strictly to be understood. It is not includes, it is means. It says apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making outward supply, includes such foundation, but excludes some items, that is land, building, civil structure, telecommunication towers, pipelines laid outside the factory premises. Now, I am having a factory of plastic granules. I will have a plinth in my factory. I'll get it constructed. On the particular plinth, I will install the machinery. I need a structure on which machinery has to be installed. So this particular machine along with that plinth is allowed as a credit because it is for plant and machinery. Our definition, it says for construction of an immovable property other than plant and machinery. So that plinth is a foundation for which that plant and machinery has to be structured upon. So that is allowed as a credit. But if that is for related to civil structure, say example, there is a factory. If you are putting factory boundary wall, will it be allowed as a credit? It will not be allowed as a credit. Why? Because it is excluded, land, building, or any other civil structure. You may contest, it is furtherance of business for the purpose of factory, that is all there. But strict interpretation of law, it is not allowed as a credit. Telecommunication towers. This is a matter already, I think in the Delhi High Court, Vodafone case is there. They have allowed the credit here, and on what principle, I'll tell you. Telecommunication towers are like plant and machinery installed on the building. They have applied the permanency test in that particular case law. They say that particular structure is not a permanent structure, it is a removable structure. So on that basis, telecommunication towers, that ITC was allowed in that Delhi High Court judgment, if I'm not wrong. Same principle can be applied, but these are all part and parcel of the litigations. For strict principles, for our compliance purposes, this is not allowed as a credit. Third one is pipelines laid outside the factory. So inside the factory, any pipeline is there, that is allowed. Outside the factory, it is not allowed. So this is the differentiation which they want to. They say that only a factory we will give you. Outside factory, we are not bothered about you. So no input tax credit. Now we'll go back. So hope this is clear that works contract, where it is allowed and where it is not allowed. Construction of an immovable property on own account. Now, here you have given a works contract, say maybe turnkey or whatever maybe, and it is not allowed. Here, if you do everything on your own account, any good you buy, you only buy cement, you only buy steel, everything you do on your own. And even you take some services also in that, labor services also you may take, pure labor services you may take, some installation with material services you may take, like you may take the service of applying tiles along with labor, tiles and labor become part and parcel of the immovable property. So any service or any good on your own account, this particular clause, D clause, is not being allowed in the department audits as well. Only safari retreats at judgment of Orissa High Court has come to the rescue, but that is also in the Supreme Court now. And we may have to see what intention of the department is, always to not to give this credit, subject to dispute. Even though there is furtherance of business, there is a mall is constructed by your own material, own service, they will not allow the credit. Because if you are giving outward supply as a leasing service or a rental service, then entire input will go into the cost of the project. So there the dispute is being fought by the SSCs. So this is the restriction on input tax credit. Now, one example I want to give you, which in my practical situation I have faced. I have a client which is a corporation which is into infrastructure in Telangana. Now, this corporation is an executing agency for the government of Telangana. So what happens here is Telangana government will appoint a contractor and will ask this particular agency to oversee the contract. But all billing, all remuneration, consideration, entire paperwork is being done by the corporation as an executing agency. The contractors are raising invoices in the name of corporation with GST number of the corporation. crores of rupees will come as the input tax credit in the GSTR 2A and 2B. But what is the outward supply for the corporation? And in general, there is no outward supply for the corporation, except they get something called as administrative fee from the state governments. That is, to oversee the project, they will give some fees. They even call it as centage fees or administrative fees, or it will be generally 10 or 12% of the particular project. So this entire input tax credit goes out. Why? Because there is no link to the outward supply. The input tax credit of works contract actually belongs to the state government, but not the executing agency. Why? Because even public sector undertakings are being considered under the definition of business. There is a government entity definition, governmental authority definition, where they try to say that it is a business which they are doing. So they don't want to give the status of a state government to a PSU. So we have to independently verify these type of contracts. Just because I am doing the particular activity for the state government, it does not make me eligible for the entire input tax credit, because there is no outward supply linked to that, because the 10 to 12% of the outward supply cannot be linked to the total contract value. So that difference we have to understand. Similarly, same PSUs, what they will do, they will execute the projects like construction of, you would have heard something called as T-Hub, Telangana Hub in Hyderabad. This is a separate NGO type of organization, but before starting it as an organization, that construction of that particular building was done by the corporation. So this corporation has again utilized the services of an independent contractor. Now this contractor will be giving an invoice on the name of corporation, but there is no outward supply in the name of corporation. And in future, they will get some revenue as lease rental from that particular building. So this lease rental is again not allowed in this particular clause itself. So whatever contractor invoices which they are giving, the entire input tax credit becomes part and parcel of the cost of the projects. So this we have to understand carefully. Now assume there is one more project. There are two projects. Cross utilization of ITC for other projects can be disputed by the department. Furtherance of business, it is there, but there is a, it gets delinked when the outward supply is specific to a particular activity. So that may be disputed. Opposite views are there. Some say that nowhere in the act it is written as that particular project it has to be, or that particular activity it has to be. But still, we have to face the disputes. Now, we have seen the definition of construction. Now, same lift definition I want to continue. That lift, I am repairing, I am maintaining to the extent of capitalization. This is again a problem here. If you charge it to the revenue, if you charge it as an expenditure, input will be allowed. But if there is any major overhaul of the lift or a repair, I have seen some professionals who have, without seeing the quantum of the particular amount involved or the quantum of the repair or the nature of repair, they have expensed it off as an expense to claim the input tax credit. That is against the accounting principles. Again, you may have to face some other problems. So the department can again dispute that you have, with an intention to avail that irregular credit, you have suppressed the facts and you have charged it as an expenditure. So, excuse me. This we have to understand. The capitalization to the books of accounts as per the principles we have to do. Contract and the valuation. This I will not go much deep. Why? Because in general, what are the valuation rules which apply? Same will apply here. In general, you have to apply the transaction value if the parties are not related and price is not the sole consideration. It means there is something which is not straight away measurable, like in the free supplies are involved, all those things. We have to, in that case, we have to refer the valuation rules. So respective rule, we have to apply market value or the nearest value or cost plus 10%, various rules we have to apply. Registration. The regular definition, that is section 22, applies to all the SSCs. 22.1 says that you should take registration from where you are making a taxable supply. In generally, we are registered in Telangana, we are registered in Tamil Nadu, so we will take registration, or we are supplying from there, we will take that. You are having a project in Tamil Nadu, you will take registration in Tamil Nadu. You are from Telangana, you are having a project in Tamil Nadu, then there is a problem here. So that is the reason I wanted to stress upon the registration aspect. What they say is from where he makes a taxable supply. Generally, even though if you consider anything as an interstate supply, from where we do a supply, that state only we will take in general. But for the purpose of supplier of services, the location will be from a place of business, from a place other than business if it is a fixed establishment elsewhere. If more than one establishment is there, then whatever is the most directly required establishment, that we have to select. Otherwise, usual place of residence of the supplier. Why I am discussing this thing? India Cements have given me a contract. India Cements, Karnataka. I am from Hyderabad. They have given me a contract to construct a factory building. Now, my usual place of business is Hyderabad. But where a supply is made from a place other than the usual place, then that establishment I have to opt. Now, what is a fixed establishment? It is a place which is other than your registered place, which is having a sufficient degree of permanence and suitable structure in terms of human and technical resources. Intention here is that you should supply the service from that establishment only. So when I have to supply a particular construction or a works contract activity for India Cements in Karnataka, I have to supply it from Karnataka. This gets linked to the place of supply. So I am actually giving the services from Karnataka because I may have an office there. I cannot daily basis, I cannot move from Hyderabad to Karnataka on a daily basis and do the activity. So I have to take a fixed establishment there, and I have a manpower there, skilled staff there to do the respective roles. So I will take registration where? From the place where we are doing the taxable service. But when it comes to an immovable property, place of supply, then we have to go here. Place of supply of services, that is section 12 of IGST Act, we have to refer clause 3A. It says services directly in relation to an immovable property. Works contract is defined as an activity which is in relation to an immovable property only. So directly in relation to an immovable property, works contract service, then the place of supply becomes the location at which the immovable property is located. Karnataka, Hospet, India Cements, they have asked me to construct the factory building. I will go there, I will construct the building, I will come back. But in this case, which registration I should take? There can be a regular registration. There can be a casual taxable person registration as well when the term of the project, the duration of the project is maximum 6 months. You can even opt for a casual taxable person registration. But if the our Telangana Secretariat is being constructed by Shapurji Palonji, so if they are not having any establishment, any regular registration in Telangana, they will take a casual taxable person registration if duration is up to 6 months. If it is more than 6 months, then regular registration has to be taken and they have to comply from that particular place of supply. So this is regarding registration. So regular registration as per section 22. Casual taxable person, there is a mandatory registration under section 24. Why? Because the supplier has to go to the respective state to do the activity. I will give one more example here. There is a client who is into dismantling services. Same India Cement calls me to Hospet to dismantle their particular plant. In my view, this is not an activity directly in relation to an immovable property. It is only an activity which is linked to the plant and machinery. They will dismantle the structure which is outside and they will take that particular scrap. They will sell it there or they will sell it to Hyderabad. So when they sell it there, that place becomes the place from which they are supplying, because the supply by the contractor is for the local vendors to give the scrap. So this is the difference we have to understand. The services directly related to immovable property will require a registration there, either regular or casual taxable person. So place of supply of services will be the particular location where immovable property is located. So place of supply also we have covered. So friends, now we will dive into the respective rates of the particular works contract activities. There are different rates for different type of contracts. What we have to understand here is there are 2-3 principles we should know. There should be a immovable property. There should be a composite supply of works contract. These are the 2 important aspects directly for which you have to go and refer the SSC code. But if either of these 2 if either of these 2 are not present in the contract, then there may be a requirement to again re-verify everything and then come to the rate of tax. So my assumption before starting this rate of tax is there is a composite supply of works contract and it is in relation to a immovable property only, because every entry of the rate structure will have this these words in the beginning: composite supply of the works contract as defined in section 119 of subsection 119 of section 2 of the CGST Act. This is the common terminology which will be there in every entry. So composite supply, presence of an immovable property only will be covered here. This is the extract which I have taken from the tariffs. In general, there will be a respective tariff of construction of residential and commercial apartments, which will be there. As there is a separate topic, I think discussion is already planned or it is already completed. I'm not sure. So I have only taken the entries which are linked to works contract. Even some changes which are there, important changes. I am not covering all the amendments since beginning, but the important amendments which are having an impact on even contracts which are even there today. Now, there was a general entry in tariff entry 2 of SSC 9954. That is 1-2 of the particular SSC, where they used to call composite supply of works contract as per section 2119 of the CGST Act. This was the only entry and it was charged at 18%. With the introduction of the new regime of the construction and real estate sector, they have removed this particular entry and they have broadened the particular contract specific entries now. Different contracts, different entries, either 5%, 12%, 18%, different rates might be there. But this entry is not there. This was a general entry where regular contracts used to be covered. In general, if you are unable to find, this was a specific entry where composite supply of any works contract will fall. But since due to disputes that which particular entry will be applicable, they have removed the particular entry now. Clause 3. CSWC in your screen will always mean composite supply of works contract. The works contract supplied to CGSGUT-LA, central government, state government, union territory, or a local authority. For our discussion's sake, I call them as government or self-government, because local authority is a self-governing body. So, works contract supplied to government or self-government. And always concentrate on these words: construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, or alteration. In some entries in the next slides, they will only cover the beginning part, the construction part, erection part, commissioning part, but they will not cover the repairs and maintenance part. So some entries cover both the activities. Some entries only covers the first stage of work, original work, civil work, and respective commissioning of the particular activity. But they will not cover the repairs and maintenance activity of that particular project again. So as we go into the next slides, we'll understand that particular aspect as well. But this entry, that is number 3. Works contract supplied to government and local authorities, government, self-government. But I have cancelled these 2 items, that is government, governmental authority and government entity. The lower rate of tax of 12% was even applicable to a public sector undertaking as well. But from 1st January 2022 onwards, this has been removed. They fall under the regular 18% category only, but not under the specific lower rate category. I'll tell you an example what happened in our state. July 2017 GST law came into picture. Telangana government or even Andhra Pradesh government, the state unit, the SGST, they have not issued the instructions of what rates has to be followed to the respective government departments, because respective infrastructure department, urban development, irrigation department, they will require an instruction from the commercial taxes department that what rate has to be opted. That was issued in July or October 2018, after 1 year of the particular introduction of GST law. Till that time, there were a lot of changes in the rate schedules. Initially, everything was 18, but from the period of even September 2017 onwards, the rates were started changing, reduced rates were coming into picture as the GST Council was discussing and deciding upon all those aspects. So these changes were not notified in time. They were notified after 1 year. All the contractors, they have levied 18% tax. And after these instructions came in October 18, the particular public sector undertakings, they opted for that respective rate from the beginning. They have asked the contractors to, or they have not paid them full amount, or they have asked them to raise a credit note if in time. That was quite difficult. So what they have done, they have not remitted that full GST to that particular contractor, and they were made to suffer. And being a contractor, he has to again get the contract from that particular authority. They never disputed, and they have lost that particular excess GST amount paid. So due to delayed response of the state government. So that was a government entity. Now that governmental authority, government entity is not there at all into picture. If any of your clients who are public sector undertakings or your contractors are having contract with PSUs, be careful with the rate which they are applying. Because even government departments, especially the state government departments, are not fully aware of the provisions even till today. And they are not applying the proper rates. So generally what happens is when you go for a tender, they will have a provision of GST in the tender document itself that how much GST will be rate. They will mention that. After that, after awarding the tender, they will give a final contract. In the final contract, they will quantify the particular amount as well. And after that, it is not easy to change the amount again. So be very careful, especially road works, construction of industrial buildings, all those things will be, they used to fall under a lower rate even when being given to a public sector undertaking, but now that is not there as this has been removed. So supplies by a contractor to a government for constructing as well as repairs of what? Historical monument. So monumental buildings, archaeological related, all those particular activities which are under this particular act only will be covered in 12%. Those. Always we have to interpret the classification entries on a strict basis. If something does not get specified under this particular act, then there will be litigation for the particular contractor. Just Googling will not help us. So historical monuments. Then the most important one in this line, in this item, is canal, dam, or other irrigation works. So Kaleshwaram project in our state, Polavaram project in Andhra Pradesh. These are all irrigation projects. They have a huge impact on the state exchequer. So these, any contractor who has supplied to state government for these projects will be following the 12% rate. Pipeline, conduit, or plant for water supply, water treatment, sewage treatment, or disposal. So again, we have one project in our state called as Mission Bhagirathi. If you would have heard, Mission Bhagirathi is a drinking water project in Telangana. So that project will ensure water is reached to every household, every village of the state. And so that kind of project will be covered under this particular entry. Why? Because they will be supplying to the state government, that particular irrigation department of the Telangana state government. That will fall under 12%. So water supply is there. Water treatment, sewage treatment. So the sewage treatments are generally given in and around the lakes which are being polluted with the sewage waters. So even pipelines, conduit, or plant, they say plant here. So it is a very broad entry. So we have to be careful in this. Even water treatment, cleaning of water, those structures also will be covered. So that was entry 2 and 3. Now entry number 4. This is a very big entry with lot of subclauses there. And if you see here also, there is no requirement of supplying to government. No to government is there. If you see the old entry, to government was there. Here no to government is there. So any works contract, then again you have to see it is construction, commissioning, as well as repairs and maintenance, renovation, alteration. So both the activities, the first work and the second stage. AMC also will be covered in the particular entry. Of a road, a bridge, a tunnel, a terminal for road transportation for use by general public. A very broad entry. Now what we have to see here is, what is this general public? I have faced this issue in one of my clients' interpretation of this particular entry. How to define general public? That is nowhere there in the GST law. My personal view is, even a set of sector, even a few areas, if you are able to cover, that can be for a general public. Now, there is an industrial area in our state. In the industrial area, a contractor is supplying the services of installing or constructing, not installing, sorry, of constructing the road or a tunnel. And that particular industrial area will have gates. We have here something called as Alip Industrial State that will have gates. it will have 300, 400 plots inside the particular gated industrial area. And there will be roads laid in between all the plots. So this road, in my view, should be called as for general public. But what department will do? No, it is only for the specific community, specific industrial units. It is not for general public. Like that, a dispute can be raised. So that differentiation we have to understand. In my view, that will also be a general public. Even the industrial sector is also general public. So that has to be holistically interpreted by the authorities. So this entry is related to road and road transportation itself, completely road, bridge, tunnel, terminal. So that has to be for general public. Next entry. They say here construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, alteration of a civil structure or any other original works. Original works generally will refer to the first stage of activity only. But civil structure can be any stage. So again, this is broad. This has to be broadly interpreted here that if construction and renovation both should be covered here, but there are various schemes here. See, Jawaharlal Nehru National Urban Renewal Mission, Rajiv Awas Yojana. Again, serial number C is linked to slum development. That is the slum land will be used and they will be giving houses there under this Pradhan Mantri Awas Yojana. Then again, the next entry leads to beneficiary-led individual house construction enhancement under the Pradhan Mantri Awas Yojana. Again, economically weaker section houses under the affordable housing partnership of this particular Yojana, Pradhan Mantri Awas Yojana, Housing for All Development or Urban Mission Yojana. A civil structure again for houses constructed or acquired under the credit linked subsidy scheme for EWS or lower income groups, again under Housing for All or Urban Mission or Pradhan Mantri Awas Yojana. So in a way, they are trying to cover these particular schemes, the construction of buildings under these particular schemes under the 12 base rate category. Next two entries, that is E and F. They are linked to pollution control and burial grounds. So if there is a pollution control or effluent treatment plant, what is effluent treatment? The water treatment plant. They will be giving you a 12% rate, but that plant should not be part of a factory. It means they want to give this rate to an independent plant. If in your factory you are having this particular pollution control or effluent treatment plant, they want to exclude it here. An independent plant only they want to give. Outside the factory, it should be there. That is the only interpretation which we can get here. Funeral, burial, or cremation of deceased. These structures also are covered under 12%. So at least who is going to Devuda will be having a lower, will be allowing that particular contractor to get the 12% rate. Entry number G, E, F, and G. This is linked to midday meal scheme. I am an independent organization, charitable entity, or NGO having a registration under 12AA or 12AB of the Income Tax Act. You should be registered under that. And a building owned by you. They say building owned by an entity. Now, if the building is leased, then there is a dispute here. If building is owned, then this will be allowed. But that should be used for providing centralized cooking. Generally, this is being converted into a CSR activity by the corporates. Their specific CSR arms of their companies, respective foundation, Premji Foundation, or this Bharat Biotech, all these guys, they have tied up with Akshay Patra Foundation. Example I am giving. And that building will be owned by the particular foundation. Akshay Patra will be using the particular building. So this building which is being constructed for midday meal scheme, using the activities of providing centralized cooking or distribution. So storage also will be covered there. Under the government's midday meal scheme, then lower rate you can opt for. After that, the next entry. CSWC is again composite supply of works contract. Other than the items covered under 1A, 1B, this is related to the residential and commercial apartment construction. So they have excluded here. Now, construction, erection, commissioning, or installation of original works. Only this much is the scope of this entry. But when you see the earlier entries, what we saw there, construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration. So only first stage of activity, that is primary construction, original works is being considered, but renovation activity is outside the purview. They say original works not defined here, but in general will be the first structure, the basic structure of the particular item or activity. So again, this is not only to government, it is to anybody. There is no mention of state government, central government, union territory, or local authority. They only say this particular supply, which is original works related to railways, monorail, metro rail, single residential unit, otherwise than as part of a residential complex, low cost houses up to 60 square meter carpet area. 60 square meter generally will be 640, 650 square feet under this particular urban poverty alleviation, this particular ministry. So there will be a specific scheme for this. So these type of low cost housing, the government schemes are being covered here. So I will not go much deep into the particular scheme, but this DA will say there will be an infrastructure status given. Example I'll give you. Dharavi is there in Maharashtra. If that particular slum will be given an infrastructure status under this particular notification of the ministry, then that can be covered here. So in a way, intention is to cover the government schemes under the lower rate. So that was entry number 5. Now 5E. These are regularly linked to our clients also. Post-harvest storage infrastructure for agricultural produce. Now, it will include a cold storage, but agricultural produce is also very strictly defined in the law. There in this specific notification also it is there. Only that particular storage, that particular agricultural produce, the first level of agriculture only will be covered. Processed, all those things which changes the nature of the product will not be covered in agricultural produce. So first stage of agriculture only will be covered under post-harvest storage infrastructure of the. So anything which is being constructed, not repairs. Our entry heading was installation, construction, erection, commissioning, installation of original works. So only that particular construction of that infrastructure, which is linked to the immovable property in the form of a composite supply, will be covered here. For agricultural produce only, rearing of animals, all those things are also covered in agricultural produce. But if the agricultural produce is processed and it changes the nature of the project into something else or some other marketable product, there will be a dispute in the agricultural produce, and this lower rate also can be disputed. Next, mechanized food graining handling system, machinery or equipment for agricultural produce processing. Same agricultural produce, if you are storing, that is allowed. If there is any food grain handling system, the total infrastructure where automatically this particular grains are being taken out, are being packed, stored, then that is called as mechanized food grain handling system. So automated factory or automated storage, everything will be covered here, but they are specifically excluding alcoholic beverages. So for food processing of agricultural produce, there will be a machinery. That particular machinery related composite supply, the installation of that only is being given a 12% rate. Nothing else here. 5A. 5A is again linked to affordable residential apartments in which the particular builder has not opted for the ongoing scheme. So if to that particular construction, a works contract is being given, then 12% rate can be taken by them, the contractor to the builder. Construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration. So again, both the stages are being covered, not only the first stage. This is a very common particular activity being taken by the various government related offices. Now let us see. They say other than 1 to 1F. What it means related to construction of residential and commercial apartments under the regular category. They exclude it. Being provided to government. Again, government entity are removed. Earlier, this lower rate was being enjoyed by them as well. Now, there is no lower rate for them. It is 18%. Again, both stages, that is first level of construction and repairs, maintenance, renovation. Everything is being covered here. Of civil structure, original works meant predominantly for use other than for commerce, industry, or any other business or profession. Now, if you read the explanation in the end here, for the purpose of only this item, business shall not include any activity in which is being taken by the government in which they are engaged as public authorities. Sometimes for some project, they are being given public authority status. So if that public authority status is being given, then that particular activity will not be covered under the concept of business. Why? Because the particular definition of business also include government for commercial activities. Common example, if government is giving land for rent, that is a commercial activity, that is a taxable activity. There is the reverse charge aspect as well as forward charge aspect to that. So in a way, if for non-commercial purpose, I am constructing a building being awarded to me under a contract by Telangana state government, that will be covered under clause A. Clause B is related to educational activity, clinical related or medical related activity, or any art or cultural establishment. We have something called as Shilparamam. There is a very big center in high-tech city in Hyderabad, which is being used for various cultural arts and all. So this construction of this particular Shilparamam will be covered under a local authority, and they will be awarding this to a contractor, which is not for any commercial purpose, which is actually for promotion of arts or culture. So that kind of building, there is no business aspect in this. That will be covered in this particular entry number B. Now entry number C, residential complex, predominantly meant for self-use, use of their employees, person specified in paragraph 3 of schedule 3. I am a contractor. I am being awarded by state government of Telangana to construct a guest house in Raj Bhavan, okay, or in Secretariat. And this will be used by Chief Minister, by MLAs, by MPs, by employees. Okay, so that is being covered in this particular residential complex. They say residential complex. It is not commercial complex. It is residential complex only. These persons specified in paragraph 3 of schedule 3 means MLAs, MPs, constitutional authorities, etc. People who are enjoying the constitutional post, they are all being covered here. So the particular background of this particular number 6 entry is government is giving contracts for non-commercial purposes, for promotion of education, etc., etc. That will be, there is something called as Birla Planetarium in Hyderabad. Birla Planetarium, they will have science exhibitions there. Okay. So that kind of construction activity should be covered in this particular clause. Clause number 7. Works contract as a composite supply, which is predominantly earthwork, that is constituting more than 75% of the value of the works contract. They say value. They don't say the total percentage of activity. So 75% of the value of the contract should be predominantly for the earthwork. What is earthwork? Excavation activity, foundational support, digging, again leveling, all those things are earthwork. But should be given to only government. No governmental authority, no government entity, no public sector. Pure government, self-government. They are only the person who should be the customers. So their 5% rate is being given. Now, I told there was something called as Kaleshwaram project, irrigation work. In that particular project, the government has given contracts to contractors to dig the particular plains, so that that particular flow of water from respective lakes or respective rivers comes to the particular irrigation areas, so that they will give the digging work to the contractors. In a way, predominantly 80 to 90% of this work is earthwork only. So that will be covered here. But no benefit to the public sector undertakings. Always, if your customers or if your contractors are dealing with public sector, assume them as a normal registered person only from 1st January 2022 onwards. Number 8. Number 8 is linked to oil and gas exploration services. They say works contract and associated services. Associated means all services linked to that particular works contract or anything else which is being provided apart from works contract. They say that take 12% rate and do the offshore works contract. When they give the offshore area beyond 12 nautical miles from the nearest point of the appropriate baseline. So from the border up to beyond 12 nautical miles will be covered here only. Other than that, regular rate will go. Services provided by subcontractors to main contractors. In number 9 and number 10, they cover item 3, 6, and 7. What are they? This particular monumental related, canal, dam, irrigation, pipeline, water for water supply, water treatment, etc. Here, even subcontractors can avail 12% rate. Number 5. Original works related to railways, single residential units, low-cost houses up to 60 square meters, post-harvest storage, mechanized food graining. Here also, contractor, sorry, I have taken 3 and 6 actually, not 5. So 6 is related to this non-commercial activities, self-use of employees. Here also 12% rate can be taken. Number 7, earthwork. Even in this case, the lower rate of 5% can be taken by the particular contract. But from the entire landscape, the governmental entity and governmental authority are outside the particular tariff, no benefit being given to the public sector undertakings. So these were the entries on which respective different rates were applicable. Now, services by way of housekeeping like plumbing, carpenting, or painting, etc., in which e-commerce operator, through e-commerce operator, they apply and they are not required to take registration. In that case only, this 5% rate will be applicable to that service. Otherwise, if they are liable for registration, then 18% will be the regular category will come. And here input should not be taken. Number 12. It is a residual category. In the beginning of the GST law, there was these many words and all were not there. Anything other than above was being covered here. Now they specifically write 1, 1A, 1B, 1C, 1D, 1E, 1F, 3, 4, 5. Other than these only will be covered. And then again they give an explanation that 1, 1A, 1B, 1C, 1D, 1E, 1F, only 1F shall attract respective rates, and you cannot take anything in the residual category. What they mean to say, 1 to 1F, anything linked to residential and commercial project cannot be covered under 18%. Straight away they want to mention here. And in the beginning, I told you the serial number 2 has been eliminated from 1/4/2019. At that time only this has been inserted. So in a way, that 18% rate has been removed from there and it has been covered here as a regular works contract. So anything other than the specific services to government or to respect on the respective projects to any SSC will be covered under 12, 15, 12 and 5%. All others will be 18% only. This is a separate entry actually, which is linked to biogas plant, solar power based devices, solar power generation system, windmills, wind operated electricity generator, waste to energy plants, ocean waves, tidal waves, energy devices plants. So in the setup of these infrastructure, these big plants and these engineering services, technical services required for this particular activity, they are giving 18% rate, but there is an explanation. They say it has to be read in conjunction with this particular serial number of schedule 2 of notification 1/17, that is rate notification. In that notification, this particular entry says for a composite supply where the particular good is also there and the particular service is also there, for biogas plants, solar power based devices, solar power generation system, the component of goods will be 70% and component of service will be 30%. This has been mentioned in both the entries. Like how an explanation is there here, similarly it will be there in that particular. So this 18% will apply on 30% of the contract and 70% will apply on the particular goods value. They want to say that 70% will be the good value, 30% will be the service value. Like that. And respective rate of good will apply. In my view, that rate is 12% in, because schedule 2 of that notification will be 12% rate. So on that 12%, services will be 18%. This is a new structure which they have created in the rate notifications. Now, what all we have seen till now are linked to the rates, but 3 entries are specifically related to exemptions also, which are mostly in the labor contract services. I will not say they are completely works contract, but I wanted you to understand that some exclusions are also there in those contracts which are in the other one. Yeah. Services provided by way of pure labor contract, only labor. Okay. For same construction and repairs, both the activities of a civil structure or original work related to particular scheme of the government, Pradhan Mantri Awas Yojana, housing for all. So they say if pure labor service, only labor contractor is there for constructing as well as the renovations, I am exempting the activity. No tax. Next activity, electricity distribution utilities. For the purpose of infrastructure of extending electricity distribution network up to the tube well of the farmer or agriculturist for agricultural use. So the infrastructure development of the distribution, electricity distribution up to the tube well, so that they should be able to use the power for water supply to that particular field. They are exempting that particular supply. This electricity laying infrastructure will be exempted, but tube well of the farmer, okay, that is understandable, or agriculturist for agricultural purpose. Agriculturist has been defined in the CGST law. Agriculturist means individual or a HUF, which is predominantly in the first level of agriculture, that is cultivation of land, who do work on his own or his family support or with the help of the labor under the family supervision or himself. So closely held group, only individuals and HUF will be covered here. Nobody else will be there. If a partnership firm is doing this particular activity, department can create a dispute here. They'll tell that you are not an agriculturist. It is only individual and HUF which can be covered here. They say the intention here is to directly support an individual person or a first level of agriculture which is being handled by a very closely held family. They are only being covered in this exemption. Next is supply by way of pure labor contracts for again original works and first level, that is construction, erection, commissioning to a single residential unit. Individual houses which you construct. If there is only a labor contractor, no supply of goods, so they are exempting the particular activity. Friends, this was the coverage of various entries of the rate structure. I think someone has written about supply of solar system as a plant and machinery, or to be treated as supply of service or supply of goods. Supply of solar system is a plant and machinery, or to be treated as supply of services or supply of goods. See, solar system, I think I have covered one specific entry for solar related activity, which is what they say in that entry. Supply by way of construction or engineering installation of solar power based devices, solar power generation system. They are considering it as a service, but with a component of good, they are giving 70:30 ratio. I think that particular ratio you have to apply in that particular service.
Thank you, Vitesh. Thank you for your presentation. Friends, the purpose of having this classification section topic was because during the audits, we have come across situations where people have not charged a proper GST rate. I have to tell this that during audits, when we were verifying, our clients does not take the consultation from a chartered accountant. Rather, they prefer to take a consultation from their friends who are in the same line of business. We have observed that normally when they take a consultation from the friends, they also do the same mistake which his friend has already done. Let me tell you that during the last income tax audit, we have come across a situation where a person who has done a works contract service for a landowner, the landowner has constructed a commercial property, the land belonging to the landowner. The contract was only for the purpose of construction. Okay, the land was not to be sold. The landowner did not have any intention to sell the property. He wanted to construct the commercial property on that land. And it appeared that the person who took the contract had charged 5%. I have witnessed it. I know that all, like few of them might have come across this situation where people have charged 5% for a works contract. And after going through the lecture of CA Hitesh Jain, it is very clear that 5% is not there in works contract. It can be either 12% or it can be 18% because it's a composite contract. Hitesh has made it very clear that for a works contract, we have to see two particulars. First is it should be in composite nature, and second is it should be relating to an immovable property. It cannot be for a non-immovable property. Okay, so the solar panels, which there is a good amount of dispute whether installation of a solar panel, whether it is an immovable property or it is a movable property. And that was one reason to remove the lacuna in the transaction. Government has come up with the solution where it's a hybrid solution, I should say. It is not in line with the Schedule 2. As per Schedule 2, a contract has to be either treated in whole sum as a supply of goods, or it should be treated as supply of service. Rather, the government has come up with the hybrid. Okay, it is out of the box where they have told the contract has to be divided into two parts. The whole contract value will be divided in two parts. One is supply of goods, another is supply of service. Okay, where they told a probable percentage of the contract, 70% will be treated as a supply of goods, and 70% or 30%, the remaining 30% will be treated as supply of service. Okay, but in all cases, it is not possible. They have given a set of principles, and we have to follow those principles. I know that in future, there will be a contracts which will be hybrid contracts, and government has to come up with certain clarifications. So I thank Hitesh Jain for throwing light on the classifications of works contract. He has made it very clear that the works contract cannot be coupled with, or it cannot be merged with a construction contract where there is a sale of land involved. Okay, here it is only a pure service. There it is not pure service. There you have a land component in it. Okay, so thank you, Hitesh. Thank you for your valuable time, and thank you for sharing a valuable information to our members. Thank you very much.
Hello. Yes, sir.
Yes, sir.
Thank you, Hitesh, sir. Thank you so much, sir.
Thank you.
Any questions from members in chat box? Okay.
Sir, that was a very clear and very thorough and very detailed explanation of works contract and the part of it. As beautifully explained, the words and the commas, even the full stops, make a lot of difference in understanding the concept of works contract. And here everything begins with the word contract, right? The contract that is entered into between the builder and the developer, whatever name that you call, and the customer decides whether it is a pure labor contract, whether it is a composite supply of works contract, or whether it is a supply of residential services, whereby the SAC itself differs. The SAC of a construction service differs from that of a works contract. So how a contract is made helps a professional to determine under which SAC the entire concept is going to come under. This was an amazing explanation of 2 hours spellbound, and we would like to hear more from you, sir. And I thank the Indirect Taxes Committee of the Chengalpattu branch for organizing such a wonderful meeting on works contract. Thank you.
Thank you, madam. Thank you very much.
Any other? Member, even if you have any other question, you can directly write to Chengalpattu district branch, and we will be forwarding the same to Hitesh sir through Samarth.
Sir, Secretary sir, shall we say about the discussion which we are going to happen? Just the information.
Yes, Samarth, please.
Yeah. Members, we are planning to have a group discussion on various matters. Okay, so we are fixing the date, and will be fixing the mode of having this group discussion. Probably we will be sharing certain questions and important questions, practical questions on the WhatsApp, so that you people can prepare your answers. Those answers will be discussed in detail, in length, and we will probably come up with the proper solution for it. I request everyone to please participate in full, and share your knowledge, come up with the proper reasoning why the changes has come, or what could be the reason why the transaction should be taxed or it should not be taxed. So we have framed certain questions on RCM. So that will be put forth for your understanding, where you can make the answering, you can find out the reasoning for your answer, and those reasoning can be shared. And a professional, there will be a moderator who will give his view, who will be giving his view in the at the end of every discussion. So thank you very much.
Satya sir, welcome.
Chairman sir is there. So
Chairman sir.
Yes, sir. Yes, sir.
Sir, Satya sir is our chairman, sir. Chairman of the branch.
Manakam, Hitesh.
Namaste, sir. Namaste.
Yeah.
Sir, any other questions? Sir, over. Dear all, I thank everyone for making this session a most wonderful one. A special thanks to Hitesh sir to clearly and neatly put forth everything in the PowerPoint. Sir, Hitesh sir, I request you to share that PPT with us, so that we will be sharing with our members.
Sure, sir.
Just send a mail to us, so that we will be having and I thank all the members. I thank our chairman sir for his presence, special presence today. And thanks Samarth sir for organizing this wonderful, knowledgeable series like this. Hope everyone enjoy. I thank you all for presenting this meeting. Thank you. Thank you very much.
Thank you.
Thank you all.
Sir, end the meeting.